Mickey D's is at a very critical level. You can see on the monthly chart what was resistance in the past became support, and we are halfway through the month of March, and price is in jeopardy of closing below this critical band at about $280. You can see it better on the weekly chart. Again, what was all-time highs became support, was support again, but this week price closed at the bottom of this band. So before we look at how low prices can go, if we get a candle close below 280, let's quickly look at this article. It is coming from investing.com. So McDonald's stock fell this past week after the company's management hinted while speaking at a UBS conference that they expect slightly lower international business sales in Q1 compared to Q4. Now, if you don't know, most of their sales revenue is coming from overseas. So this is pretty critical. Company is still grappling with the ongoing war in the Middle East and has observed a sluggish start in China for the year. Despite challenges, McDonald's remarked that its operations in China are managing okay, although the environment remains tough. McDonald's is actively working on strategies to improve outcomes in France and expects its Middle East business to recover post-conflict. So you can see they're talking about their international markets in the Middle East, in Asia, and also in Europe. The company highlighted a shift in consumer behavior, while lower-income consumers increasingly turning to grocery stores over dining out after depleting their sales or savings. Now in the U.S., back in the days, a Happy Meal was $5. Now you're looking at $10 plus just to get a meal, which consists of a decent-sized burger, fries, and some type of drink. You're looking at close to $20. This trend poses a challenge to the restaurant sector at large. McDonald's CFO Ian Borden shared insights into how the chain is adapting by introducing $4 bundle deals across most of U.S. locations. Again, they got to provide a lower price point meal to get consumers to come into the stores. All right, so again, fundamentally, I do see a candle close below this 280 in the not too distant future, especially if the markets are going into a recession, the global market that is, and that's going to put some pressure on the markets in addition to individual stocks. So if we do see a candle close, the daily chart, and what we can see is prices are now below the 200-day moving average, which is critical for the first time since November of last year. And you can see how we ended the day on Friday down near the lows. So the question is, how low can price go? I mean, you do have a level of interest at 276. You have a rallying price, basic candle rally out. But again, if you look at the top and the bottom, this is in the middle, right? So you typically get a lot of chopping. You want to play the extremes. And so I'm looking of any levels of interest closer to the extremes, and particularly on high volume. And so if you look, you have this W pattern. I like this $250 level. And typically when price breaks the apex of the W, prices tend to come back, test it, and move higher. But if you look at the way this W pattern is, you had a slight pullback and then the move higher. It tells me that there's buyers below 256. So let's see what happens over the coming weeks. But I do think McDonald's is headed lower. Thanks for watching. Subscribe. Please like the video.